Well, welcome back to the show. I didn't formally introduce Tucker on the previous segment, but he is our guy from Guild Mortgage. Many years experience in the business. And I also didn't ask, what did you do this weekend? But that doesn't matter. I actually want to know, do you have a tea time book for this weekend? It's supposed to be spectacular.
I do, and I have a mountain that I plan on summiting this weekend as well.
No, which one?
Well, we're still evaluating conditions because it's early season, so either Mount Tenerife or if that doesn't come together, we'll just do Mailbox Peak.
Mailbox. Got it. Okay. Mailbox would be a safe bet, right? The other one.
Exactly.
Okay. Very good. We'll be safe no matter what. We need you back on the segment next week. So, I mean, obviously your wife would like you to come back. Is she going with you? I should just ask that.
No, she's gonna pass on this one.
All right, yeah. So definitely be safe. That's awesome, though. Take some pictures. Want to see them? Bring them to the show so we can show everybody. All right, so let's talk about financing these things. First off, we kind of described a little bit about what an ADU is. Do you want to add anything to that?
No, the way I describe it is it's just an additional residential living unit on the same property. It's just a way to kind of add living quarters to an existing property.
Yeah, and I want to specify the difference between kind of the affordable housing aspect and the real additional living quarters aspect is, this kind of goes back to a mom-in-law suite, right? Is having a spot for mom, a rambler maybe in the back of the house so that she can live and have her space while also being able to be independent but be cared for. So that is a real practical reason for this. The affordable housing or even separate living situation where it's somebody owns the house now in yours. These are two different ones. So, but the process is still the same from a financing standpoint, correct?
Exactly. Yep.
Okay. So why do you think these things are so popular?
I think it's a variety of reasons. I think you hit the first one is you have just aging parents or aging family members, and they're wanting to keep those family members nearby to care for them and age in place and avoid going into nursing homes. So that's one aspect of it is this multi-generational living. But then the second, I think, biggest thing is housing prices and the ability to create income generating opportunities with an existing property they own.
Yeah. So whether you use it as an Airbnb, home office, extended family, those types of things. Okay. So if you're a homeowner and you're kind of looking at whether or not you could qualify for this, perhaps you reach out to the team and we help guide you through the possibilities. What are our options for getting funding?
Yeah, so there's a variety of options, and we're talking about somebody who owns their existing home and wanting to add it. And there's a variety of reasons. And I think the first one we should talk about is how do we obtain funds to build this without disrupting the current loan that you have? Cash out refinance has been the tried and true way in the past for people to do home renovations, add a pool, same kind of concept of adding an ADU. But what about these 2.5% to 3% interest rates that people were able to get in during the pandemic? They don't want to do a cash out refinance and disrupt that loan. So the cash out refinance is, of course, one option. But the other options would be a home equity line of credit. And whether it's a variable interest rate option or what we have here at Guild Mortgage is a fixed rate solution where we can tap into that equity without disrupting their current loan at that historically low interest rate. So that way they're just borrowing the construction expense at today's interest rate. So those are the two ways that we can do it with an existing home. And then the last way would be a renovation loan. So through Fannie Mae, a conventional mortgage, they have a Homestyle Renovation product that allows people to either purchase a new property and obtain additional funds to build an ADU, or they can refinance out of their current mortgage into a Homestyle Renovation loan to get additional funds to build it. So there are many different ways that people can obtain financing to build the project that they're looking to build.
So then what you're saying is that second one or the last one sounds like a hybrid, is like you get a loan for the balance, but then you get a loan on top of it?
Exactly. Yep.
Okay.
Yep.
And in the renovation one, for example, I've got a property that sits here in Everett that I looked at that the downstairs is completely unfinished. Its current value is below 640. I believe its after rehab value is somewhere in the mid sevens, maybe a little higher depending on how well the remodel is done. And then I'm also eyeballing that for some ADUs. Do you think the bank will utilize the value with the ADUs as an after rehab value in order for one of these home renovation loans?
They do. Yes, that's a really the coolest piece about it is they'll use the after renovation value, and we can go to 95% of that value with the new loan. So, you mentioned it was an
Oh, wow.
original value of 600, it's now a value of 900. We can do a loan up to 95% of 900,000 because we're going to have the appraiser say, what is the value after this unit is built? And the down payment requirement is still 5%. So it's a great way if somebody is looking to buy a home in this scenario, we do the renovation loan up front and we can construct that unit before they even move in.
Yeah, if you're watching this video, I want you to imagine taking a house at 650 and turning it into 3 properties where the main unit is going to now sell for 8, maybe 758, and the 2 detached ADUs are going to sell for 500. So that's going from 650 math-wise to like $1.4 million in value.
Yep.
That's an investment that you can do, and essentially is instant cash flow if you want to rent it, or if you have some in-laws that want to live on the back, and you build that dadu on the back, and now you've created a nice piece of investment property that will actually bring you more money in the future. So that's cool. I did not know you can use the purchase renovation for that. So we should kind of run some scenarios through to see how much that costs from a cost basis and where you end up afterwards with it built. I'll send you the numbers on that, Tucker, so you can look at that. That's kind of cool.
Absolutely. Awesome. We could maybe do a deep dive into that as a case study.
Yeah, we should. We've talked about doing case studies here. We should definitely take the time to kind of write out the homework. And I've got some of those numbers together, so maybe we can put something together for one of our future podcasts. Awesome. Tucker, how do people get a hold of you?
You can call me at 425-757-9202. That's probably the easiest, call or text, or you can find me online at all the major platforms. Google Tucker Maxwell Guild Mortgage, and you'll find me.
All right, stay with us. We're going to be joined by Jeremy Morgado right after this short commercial break.